Hi guys, David here for the Financial Couple. On today's video, I'll be going over the 5 biggest mistakes that I've done while investing in the stock market. So without any further ado, let's get started. For mistake number 1, we have pumps and dumps. And this, I know, a lot of people know what pumps and dumps are, but just in case that you don't know, pumps and dumps are usually companies that, let's say that they started at $3 and then people start buying it. It starts increasing its value, and then a lot of people are going to be like, whoa, you know what? I might as well just buy right now since it is so cheap, it might double its value. And then everyone just waits until it makes it to like its highest point. Let's say it's $6, $7. And then at the next day or within a few days, everyone just sells and the stock just could go from like $6 to $2, depending on how aggressive it is. But one of my earliest mistakes while investing was putting my money into NEO. Now, if you guys don't know what NEO is, everyone was saying that it was the Tesla of China, which sounded as a really good company. It was my mistake that I didn't do a lot of research on it. And what happened was that I bought it when it came out as an IPO. So the stock started at $6. But I remember that I had to put money and then it was going to take 1 day to process for that money to my trading account. On its first day, the stock went from $6 all the way to $13. And I was super excited. I'm like, man, this stock could even go higher at the next day. Well, guess what? I was extremely wrong. This is what I did. I had a position of $500, which I know it's not a lot. But at the same time, I truly believe that it's a lot of money, especially when you're just starting, which was my case. And what happened was that I put those $500, I bought the stock at 13, and within a couple of minutes, the stock went from $13 to $6 and then to $5, which was devastating for me. I was extremely nervous about it. I didn't know how to react. And my first thought was to sell, but I just decided to hold it. So look out for pumps and dumps. That's my first mistake that I did. For number 2, do not check your account every single second or minute or hour of the day. This was another early mistake that I did, and I actually did it when I bought Starbucks. So the stock actually went from like $65, if I'm not mistaken, all the way to $54. So I saw that drop and I said, you know what? I'm just going to buy it. It looked like a really good investment, and at the time there were like 4 to 5 Starbucks opening around my area. So I thought that it was going to be great, So I bought the stock. I think that it was early August of 2018. And then after that, I just kept that stock for like 2 weeks. And I was like looking at it every single day. I would look at like, man, it went from 54 to 55. Man, I might as well just sell it right now. And then it would go down to like 53, 50, 49. I'm like, oh my God, I'm losing money. I'm just going to sell it. But everything started happening because I would check that stock or my account every single day. As soon as I would wake up, as soon as I would get to work, as soon as I would have my lunch break, as soon as I would get home, every single day. So that really created that anxiety, and it just got to the point where I just couldn't take it anymore. I saw the stock went from 54 all the way to 50, and I think it dropped even lower, maybe to like 45, and then it recovered all the way to like 55, 56, and I actually decided to sell the stock. I did make a profit of $14.95, which of course, when I had to pay my my broker, that was pretty much $0. And now if you look at the stock, it's above $80, if not $90. So as a recap, always hold for the long term. Do not check your account. Let's go over the next one. For number 3, do not buy stocks based on someone else's opinion. Do not do it, guys. In my case, I was following a bunch of groups on Facebook, and I was also thinking of buying courses. And there was always people calling out certain ETFs for gold, for natural gas. And one of them was UGAS, which I bought. This was towards the end of December of 2018. So I noticed that the stock went from like $60 and it went all the way up. It spiked to $210. And then from there, it went down again to like 114. And then it just kept going down. So when I saw it at 71, I'm like, man, I might as well just buy it right now, Everyone is saying that it's a great investment, so why not? So I decided to buy $2,000 at 71, and man, it was a roller coaster, The stock just kept going like up a little bit and then down, 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 and then it recovered again. And I even thought about doing the same thing that I did with my Starbucks stock. I'm like, I might as well just sell it right now. I can probably use those funds for another stock that might be more profitable. But hey, I was very new to the game, so I just decided to keep it, and I had that mentality of like, oh, I'm just going to hold it long term. Well, it turns out that stock just kept going down, 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 and if we look at exactly today that I'm recording this video, the stock is currently around $15. So yep, I've lost over 80%, if not a little bit more, if not a little bit less, of my position. So that's definitely one of the worst mistakes that I've ever done, and I actually still hold that one just to remind myself to double think before I make an investment. So once again, as a recap, do not buy stocks based on anybody else's opinion. Make sure you do your own due diligence. Do not do it just based on someone that you saw on YouTube, or maybe your coworker told you about buying Facebook stock, or maybe your uncle is like, hey, I feel that Amazon is going to do great. Do not do that. Just make sure that you have your own set of rules, and then you just go from there. For number 4, we have do not get caught up on all the noise. And by this, I mean to not listen to all the media that is out there. It doesn't matter if the stock is going up or down. You should know your fundamentals and exactly what you're looking for on a specific company. But if you just keep listening to all those networks of what they have to say about a stock, they're really going to change the way that you think. And this leads me to my example of Facebook. So I bought Facebook. I don't know if you guys recall, probably a lot of people do, when Mark Zuckerberg actually had to go to court and explain if they were actually selling our data. So after that, the stock went down. It went down, if I'm not mistaken, to $160. And then within a few months, it went up all the way to $210. Then after that, it had another aggressive sale. And I honestly felt that it was a good idea, So I actually bought it at $163. Now, I held that stock for probably, I still have that stock, but at the time I was holding it for maybe 4 to 5 months. And I noticed that the stock was just going down and down and down. And I was thinking, man, I truly believe that this company is going to do great, because I was looking at a few statistics, and I was noticing that everyone was using Instagram and that Instagram was starting to grow. And I also noticed more advertisements while I was watching a few videos on Facebook. So I noticed that there was going to be more revenue coming in, but the stock just kept going down and down. And it got to the point that it made it to 123. And I was going to double my investment there, but I would always just check the news just to see what they were saying. And a bunch of pages were just saying that Facebook was doomed, that it was probably going to be the same thing as MySpace, that there was going to be another company that was going to take over it. So I got afraid, I got really scared, and I just decided to hold it. And if we look at Facebook now, the stock just went back up, and I think that has gone over $200. So again, do not get caught up on all the noise. Make sure that you do your own due diligence, do your own research, and then just look at positive feedback and at negative feedback, and then just make the best outcome and whatever is just best for you. All right, so for the recap is, don't get caught up on all the noise. Let's go over the next one. Finally, for number 5, we have do not sell based on pure analytics. And in this case, I'm talking about technical analysis. Ever since I was a kid, I've always been obsessed with supercars, and especially with Ferraris. So when I started looking into all the stocks and all of that, I always wondered if Ferrari had their own one. I thought that investing my money into that company would be a really good investment based on all the reputation that they have. And lucky enough, yes, their ticker symbol is RACE. Doing my analysis on the stock, I noticed that their support and resistance was at $93 and $140. So I did notice a drop on the stock from $140 to $114, and I decided to buy it. But I told myself my strategy is just going to be to hold and then just wait until it hits 140, and then I'm just going to sell it, because that's the point where it usually just comes down. So I held the stock for a couple of months, and it would just go up, and then it would just come down. It would show some signs of consolidation. It would go up, it would go down, but it would keep growing consistently. So it got to the point where it was getting really, really close to hit 140, and I even thought about investing more money in it. I was looking at the news, I was looking at how many deliveries they were having every quarter, and it just got to the point that it hit 140, and I decided to just sell it. I thought that was the right thing to do, and I made profit, did over 15% within a few months. But then after that, the stock went down a little bit to maybe 135, and then it just skyrocketed to 170. So I definitely learned my lesson, that sometimes it's just better to hold and to see what it is than just waiting 3 months, 4 months, 5 months, because in the end, it all depends on the actual company, not on their earning reports, not on what everybody else is saying. So if you guys found this video helpful, please let me know by hitting the like button, subscribe to the channel, and click that notification bell so you know when we upload videos. We'll be consistent, uploading 1 to 2 videos per week, talking about the stock market, real estate, and millennial money. Guys, don't forget to follow us on Instagram at The Financial Couple. If you guys have any questions, please link them down below, and I'll get back to you as soon as possible. And besides that, I will see you guys on the next video.